Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Dadia. We have with us Riya Singh, technical analyst, currencies joining in. Riya, welcome to the show. Let's start with the Indian rupee. Clearly, the rupee has been in focus, taking into consideration that coming week, Monday, we have the budget. There could be a lot of gyrations. Now, the RBI has continued to buy into Forex, cushioning the strength of the rupee. From here on, what's your anticipation and what direction are we expected to see it move? And what's the kind of range that we are watching out for?
Hello, Hiran. So I think rupee's momentum will be very sensitive to the budget until the budget. I think because as you said, there has been the RBI has continued to do its forex purchase, which has obviously led rupee to not uh, appreciate beyond the 70 to 80 levels. The range that we have hailed to as a support, the 73 to 70 to 80. So until the rupee breaks this support range, there will not be much of appreciation that you can see into the rupee coming forward. And then there is if you look even at the numbers that the for the quantity, in terms of the RBI has bought into. I think they have bought around $1.57 billion of foreign currency assets just till the week ended Jan 15. So they are heavily buying into the forex. So obviously this is going to fuel into the demand for the dollar, uh, at least on the domestic front. So, taking that into consideration, and even with the quantitative buying of forex that the RBI is doing, so prior to prior to the this number that was published, it is not working very well in the for the strength of the rupee. And plus then there is a budget that is coming up. A lot of anticipation is there with respect to the budget. Lot of fundament lot of data will be very crucial for the strength of the rupee, because the pandemic situation has led to uh, government raising fueling into the economy by borrowing, by increasing in the budget, obviously through the borrowing. So the borrowing that it has done for the current fiscal year, and what are its plan for the fiscal 2022 is would be another data to look forward to. This will obviously weigh a lot into the when you look to paint the whole picture of the economy as it where it will be led with like I said, this is a very crucial budget for the Indian economy as well as for the rupee going forward. How the RBI will work toward, you know, uh, to withdrawing the excess liquidity that is there into the banking sector. The major uh, hurdle for the RBI facing now is to withdraw the excess liquidity that have been uh, given to the banking sector. So, how they will tackle with this problem? What will be their estimation with respect to the budget deficit shrink if they are going forward towards that perspective? So, unwinding surplus liquidity into the banking system, moving out the inflationary pressure due to the excess money supply that is there into the economy, and what will be the borrowing. The borrowing budget that the RBI has. I think this will all play a quite a role into the setting up a perspective or a timeline towards the strength, how fast the strength will be there into the rupee. But I think going for on a shorter term, I'm not very much uh, optimistic on the strength of the rupee. I think the best perspective for a positional call on the rupee will be to buy on dips rather than going short on higher highs. I think it will maintain the range that it has done from the past 1 month. The range that is 74 to 70 to 80. So that is the range that it will follow for quite some time, at least on a shorter term.
Right. So from there on, what would you look at? How would you look at the dollar as well? Because clearly, now it's added to recent gains. It's approaching the key level of 91, and it looks to risk trends and data as well, because from here on you have a lot of key data which is in focus. You have the US flash Q4 GDP, the weekly claims, the trade balance which is next on tap, and again taking the vaccination drive in the US that has picked up as well, because of which you're seeing some gains come in on the dollar. So how would you view the dollar from here on? Do you think this is sustainable?
I think the recent development that has come with respect to the Joe Biden's administration, I think they are quite speeding up with the shipment of vaccinations, thrice the times that they were doing in the past week. I think if this does, go through their planned, their planned pathway, and things do pick up, it will be a very favorable thing for the US. And obviously, if this go, there is always a risk of it going wrong. But as fast as the economy and the people of the economy are back on their foot, there will be a smooth transition from the pandemic to the post-pandemic phase. So obviously, this has fueled into a lot of positivity for the dollar as well. But going forward with the data, there is a perception, obviously, that there will be a pickup into the numbers, taking into consideration with the recent pickup that is there into the economy. And I think for a short, I think there can be a turnaround for the dollar index going forward. There is not much of a harsh sentiment there is there into the US altogether. The shift into the presidency is again something that all were looking forward to, and it has happened smoothly. And the whole it's been a week now, and there is a positive sentiment that is coming forward from the administration of the new government, whether it's respect to the vaccination, whether it's respect to the whole package, fiscal package that will be provided. And obviously there are some issues that are still need to be sorted out, but I think with the time US China issues is something that there it will be again on the pages of the administration. But going forward, uh, I I think there can be a turnaround into the dollar index.
Right. And if you talk about the euro as well, it's been gaining strength versus the dollar as well as the pound over the last couple of trading sessions. Are you expecting this trend to continue?
By looking at the fundamentals of the whole eurozone, the picture doesn't quite support the strength that is there into the euro right now. If you look at the whole political disturbance that is there into the Italy's government, and then the whole eurozone economic numbers, there's not much of a pickup there. So the whole strength that is there into the into the euro is coming forward from the ECBs. There has been quite a extensive buying that has been done from the ECB side of around 161 billion euro worth, whether it's through the German securities, whether it's through the pandemic emergency purchase program, or through other channels. But they have been doing quite a lot of uh, purchase into the euro, you know but I think going forward, uh, they are studying, as the recent statement have stated, that the policymakers are getting ready to study what is the major reason that is there into the appreciation of the rupee against the greenback. Because obviously if you look at the whole eurozone, even they want to push up with their import and export, the whole trading block again. So, in order to promote that, it is very important, even for the eurozone, to get the euro at a very competitive level, where there won't be any hurdles with the import and export scenario. For especially for the countries who are export majors. So I think if they do study and there is some retractment that can come with respect to the euro buying, you can get some dip into the euro. But if you look at the whole fundamental point of the strength of the euro, there is not much of a backing up. So I think going forward, there can be some unwind of the strength. The whole strength can unwind, and for me, euro and pound are the pairs which you can short at a higher levels, because if you look at the fundamentals, the technical parameters, it is not supporting the strength of both the currencies. So euro and pound both are the best position that you can take in them is going short on the higher highs rather than buying on dips.
Right. So, any recommendations that you would have?
uh, you can definitely go short into the pound. If you look with the current contract, it has continued to go to trade into the bearish zone. So if the pair opens up below the 100 levels again, it will definitely go for a 99.75 test level testing. So you can short the pair below 99.98 for a target of 99.75, keep a strict SL of 100.17. The next pair that you can go short into is JPY INR. Even in the current contract, it has been a very weak opening for the JPY INR. You can go short into the JPY INR below the level of 70.25 for a target of 70. Keep a strict SL of 70.45 in the pair. For the USD INR, I think it has been quite sensitive with all of these development and with the budget around the week. I think it will be a very narrow trading range for the rupee. It will trade between 73.45 to 73 levels. So an open below 73.19 is a very good level to go short for a target of 73. Keep a strict SL at around 73.30 in the USD INR. But it will be a very narrow range trade. You can definitely go either short at the level stated, or you can buy from the dips around the same 73 levels by keeping a SL at 70 to 90 and so forward. So play within the range for the USD INR at least till the budget, and yeah, till the budget you can play into these range for the rupee.
Right. All right, Riya. Thank you so much for sharing your views as well with regards to how the currency markets could be performing from here on. Thank you, participants, as well. And we will be back next week. Thank you so much.